This is another buying opportunity in our view. 2024 has proven to be a year where the market's been strong and it has eluded many opportunities for sustained weakness. I know yesterday's pullback was really painful, but to us, I think the fundamental supporting stocks are intact, and I think it's a good opportunity for investors here.
Eat the chip or buy the dip? That's the question that I want to ask you tonight. So hello, my name is Mike. This is Health and Wealth. Thanks so much for joining me today on another episode of my channel. Appreciate you being here. Yesterday and today were rough days for most YieldMax funds out there, along with the stock market itself, with a day and a half worth of drops out there. For me, I'm currently invested in CONY, MSTY, and Dividend, and these are my three funds that I've put my hard-earned money into. And I've noticed a large decline in price over the last, let's call it 24 hours here. So the question is, do you buy the dip or do you hold and hope that the waves of downward motion stop? Or are you going to sell your shares in thoughts that the market will crash even further? Now, before I dive into this is not financial advice. I'm just some regular guy on YouTube discussing what I'm going to do with my funds. And, let me know in the comments how you feel about the last couple of days. How's your stomach handling it? And how are you doing, right? So I'm reading a comment right now from the Feds yesterday. I'll go ahead and read that to you. It says here, the move the Fed's third rate cut of the year reduces the central bank's target rate between 4.25 and 4.5% in its statement announcing the cut. And I like this highlighted blue section because I think this is the reason that the market has dipped so low. The Fed now projects that 2 interest rate cuts for 2025. And the people don't like that, right? So it says here that unemployment rates remain low while the rate of inflation remains somewhat elevated. Now, what the concern is that they could raise interest rates in the next few months here if that inflation kind of flares up any more than it does right now. So what are you going to do, right? What are you going to do? For me, I think I'm going to just sit here and hold. And I get a lot of questions about people saying, what's your exit strategy of this? What is your plan? For me, I'm a buy and hold investor. Does it make sense? Maybe, maybe not, but we're going to see how it works out for us here. Like I've said before, I've been through 3 dips before. I don't know if I've necessarily been through a full crash. So let's take a look at some of the numbers here. What I want to do is go to Mr. Stock here. I want to take a look at the last 2 days or the last 5 days. It's dropped 18% in value. That's a lot. That's a ton. Now, if we talk about market crashes, you're hovering around that 25% mark. And so this is a lot of money that it's dropped in that period of time. Let's take a look at MSTY over the last 5 days. MSTY's kind of double whammy here because they just the ex-dividend date for MSTY was yesterday. So they announced a $3.08 distribution. So that also came out of the price. But MSTY is so far down 22% in that same amount of time, just 5 days. Now, this happens quickly, doesn't it, right? That was at $36 5 days ago. That happened pretty darn quick. And so I reflect on the one YouTube channel I was watching. I mentioned in my last video too that the guy said, I'm selling everything and I'm going all in on MSTY before the distribution comes out. And, if he had have done that, he'd be down $6 right now in share price. And I mean, he would have got a nice $3.08 distribution per share tomorrow. But, putting all your eggs in one basket may not be the wisest decision, especially on a ETF that follows a stock as volatile as MicroStrategy is. So, are we there yet? Is the dip done, or are we going to keep dipping? That's the question, right? You guys have ever seen that meme where I already bought the dip, I don't have any money left? That kind of meme, right? Take a look at Coinbase here. Coinbase just down 2% today, not too shabby, but down 13% over the last 2 days. So that means yesterday, or last 5 days, sorry. That means in the last 5 days here, other than today, was down 11%. But if you take a look, it was mostly yesterday, right after that meeting, 2 p.m. We went for a nice toboggan ride down the hill, a little bumpy as we went. Coney, which is going to be my little baby, 189, 183 shares, something like that. Down just 1% today. That's not too shabby. If you look at the last 5 days, it was down 10% yesterday. Look at that little decline there. Not too nice looking. Nvidia just kind of hanging out, right? What's that new meme that's going around? The cool bro or whatever. That's Nvidia here, up 1.37% today. Over the last 5 days, down almost 6%, but same deal yesterday with the dip. I mean, if you looked at the SPY, it's the same thing. It went down too. If you look at the last 5 days on Nvidia, down 4.97%. So these are my top funds. And something that I started doing, and I've only done it now for 2 distributions. I did it for the Nvidia distribution. I did it for the MSTY distribution. Was I took 10% of that distribution and I left it as cash for occasions like this to buy the dip. So this morning, I didn't, it's not much, right? With my Nvidia, I had a $400 distribution. So that would be 40 bucks in cash hanging out in my account. No big deal, 40 bucks, right? But what I did with that is I went ahead and bought an extra share of MSTY this morning. So today's the ex-dividend date. I said, you know what? Doesn't matter. I'm buying on the ex-dividend date. And so I bought, I think, 10 total shares of MSTY this morning. Now, for me, I bought it at $30. Oof. So it went down even more. But what can you do, right? Timing the market as opposed to time in the market. So that's my plan. I'm going to keep buying, going to keep stacking. If this thing, if we take a look at the last 6 months, MSTY here was all the way down to $19.07. It went all the way up to $44 here, 44.40, just a month ago. A month ago today, basically, it was up to 44.40. So its swings are dangerous, or its swings are violent, and I'm here for the violence. I want to go ahead and make money, right? So I will keep buying MSTY. I'm going to keep buying Nvidia, and I'm going to let Coney do its own thing with the drip. I'm going to keep buying Coney as well. But I think it's important for people to invest within their means. And occasions like this, if you're maxed out on margin, these are the types of occasions that can really hurt you, the long-term you. And so for me, I've been preaching that I'm not in margin. I'm using my own hard-earned money to do this. And, you get the comments like scared money doesn't make money, but scared money also doesn't lose a lot of money too. And so that's where I'm at with my account. I'm not losing a ton of money. The account value was almost at 22 grand 5 days ago. And now it's just under 20,000 right now. So it's not like I've lost a ton compared to somebody that has a lot more shares of these funds. But, I'm down for sure, right? I'm down just like everybody else. It's all about that percentage that I'm down. And what am I going to do? I'm going to keep buying every single distribution, buy, build these stacks up, bring in that income. That's the plan. Now, that plan might not work for you, but it is what I'm going to do for me. Now, I was able to watch a pretty good video. I love this guy. I don't know why I love this guy, Tommy. Have you guys watched any of his videos? So I'm going to play that for you. It's talking about buying the dip here, and I'm going to come back and have a chat with you at the end of that, okay? All right. Enjoy. Here we go.
One of our next guests thinks this is a great buying opportunity and the Fed remains supportive. Our other thinks the Fed will be on pause for the time being and could even hike again if inflation reignites. Joining us for more is Tom Lee, Fundstrat Global Advisors Head of Research and a CNBC contributor, and Jeff Kilberg is founder and CEO of KKM Financial. He's a contributor as well. Tom, we'll start with you. I take it you think this is a buying opportunity.
This is another buying opportunity in our view. 2024 has proven to be a year where the market's been strong and it has eluded many opportunities for sustained weakness. I know yesterday's pullback was really painful, but to us, I think the fundamental supporting stocks are intact, and I think it's a good opportunity for investors here.
A good opportunity for investors. Jeff, I take it that you feel is differently putting it too strong?
Well, I don't disagree with Tom on the fundamental side of it, but I think if you look at where we're at with the interest rates, what's on the horizon from taxes, tariffs, and deficits, I really have to be considerate of what happened yesterday. It was the second largest move in the VIX we have seen. And historically speaking, Kelly, Tom is right. A month after that spike in the VIX, you see the S&P 500 higher. However, I don't think we can lean on history here due to the fact that we've seen stretched valuations in the top 10 names of the S&P 500. We've also seen just a straight line up. If you look in the last 2 years, back-to-back years of above 25%, we've become conditioned that the market is just going to continue to move higher, thanks by and large to the Fed dovishness in their $7 trillion balance sheet. So I'm looking, I know Tom wants to back up the truck here. I have the truck running, but I'm not ready to back it up yet. I want to see this more process, reset valuations. I think that's going to be the next couple months, possibly the first quarter, because we've become too conditioned, Kelly, to markets repricing in a day. I have to go back to my 30-year career and understand that we will see reset valuations more of a quarter or two, not just a day or two.
You know, Tom, this has been a bit of a slide for the Dow, to put it mildly. We had 10 down days in a row. You say you saw signs of capitulation yesterday, as it was a 90% down day.
I did, Tyler. As context, the market has been bleeding lower. If you look at internals for the last 10 days, yesterday looks capitulatory because not only did we have a 90% down day, but the VIX, the spot VIX, exploded by 75%. There's only 4 times in history where it's risen 60% in a day. So yesterday was the 5th time in its 35-year history. Of those 4 times, the market recovered all of its losses within a week, 3 out of the 4 times. The 4th time it took a month. So I think what you had was people panicking to get out of what they thought was a momentum trade that's ending because we're so close to year end. But here's the interesting thing. The forward VIX futures curve barely moved. So it was almost as if people were seeking protection through the VIX yesterday.
What tells you, Jeff, that more valuation resetting is to come?
I think due to the fact that we only had one down day, Ty, typically when you see prices reset or revalue, you have consecutive down days, and those consecutive down days bring along margin calls. And you saw Interactive Brokers head talk about his concern of margin being used on the Mag 7. So when I look at a day like today where you're seeing passive indexes buoy the overall 3 major indices, NVIDIA, Facebook, these names are coming back because you're seeing people deploy cash in a passive index. So I do get concerned about that short-term volatility, but I'm going to embrace this volatility over the next month or two because I don't think history is going to line up. This is not going to be the same way. We've seen a straight up move ever since last November, and especially since November 5th after the election results. So I do have concerns short term, but I am cautiously optimistic at 2025. But there's going to be more volatility. This was like a depth charge that went underneath the water. There will be ripple effects.
Tom, let's talk about the small caps for a minute because they have these kind of moments where they look really promising, they go on a tear, and then it just stalls out. And a lot of investors are feeling frustrated and wonder if it's worth sticking around.
Yeah, I mean, I'd say investors are tired of having like the rug pull on small caps. Yesterday is an example. Unfortunately, when markets get nervous and they're risk off, and of course, buyers disappear, stocks that aren't as liquid get hit harder. That's why the Russell not only has been sort of under pressure for a couple of weeks, but really got hit yesterday. But do we think anything has undermined what makes small caps attractive the next 5 years? It's still in place. I mean, they've underperformed the last 10 years by the second largest magnitude in the last 125 years, except for 1998. So not only are they derated, but now we have a roadmap of deregulation, possible mergers. at a time when financials, which is a huge weight in small caps, look more promising, and things like biotech, which is a huge weight, also look more promising with deal activity. So I actually think this is, again, another chance to buy a dip.
Is it another chance to buy the dip, or is the VIX correct here? In the last 5 days, up 78%. That's the question that we should be asking. Is the VIX correct? Is this thing going to tank even further? So for me, buy the dip. That's my thing. I'm going to keep doing it. In fact, I'm not happy about the share price of my MSTY right now. I wish it was a lot lower than it is. So I'm hoping for opportunity to be able to do that. My next distribution for me will be Dividend, which is going to be in 2 weeks from now. So we may end up buying some MSTY at that time, depending on how the market is doing at that time. So that's going to be it for me. If you're still here, really appreciate the loyalty to my channel. Thanks for being here. If you feel like subscribing, go for it. I'd love to have you join. But I wanted to wish you all a happy night. Tomorrow is my last day working this year. Can't wait to produce more content for you. Thanks for tuning in tonight. My name is Mike. This right here is Health and Wealth. Have a great night. Bye for now. Buy the chip or eat. Buy the dip or eat the chip? That's the question. Hi, my name is Mike. This is Health and Wealth. Thanks for joining me tonight on another edition on the channel. Been a bit of a rough day, and an even rougher day yesterday, hasn't it? So Fed Powell made an announcement that they were going to drop the interest rates by 25 basis points, and then said we're not doing any more for a little while after that. I'm not too sure if he said that or if he implied that.